One of the saddest things I see as a realtor is a situation where the buyer only lived in the home for a few years, never filed a homestead exemption, their tax value doubled during that time, and next thing you know, they've been foreclosed on. Like literally, the tax statement tells a story. The homeowner didn't understand their property taxes, and the taxes literally cost them their home. If you're buying a new home, you need to know this right now. There are hidden property taxes buried into your closing costs that could wreck your finances if you're not careful. We're talking about PIDs, MUDs, land-based values, inaccurate exemptions. These may not be disclosed up front, but they can double what you thought you'd be paying. And here's the worst part. Sometimes lenders will lowball your tax estimate on your loan documents, so when your real bill hits, you could be out thousands with no way out. In many of my videos, I've emphasized how important it is to use a tax estimator for calculating your property taxes. You want to be an active participant in determining your monthly payment, right? And the tax estimator can get you that information. What becomes a problem though is when you don't know what fields to enter on the tax estimator. You can easily get the wrong amount. And when it comes to the mammoth beast of Texas property taxes, you can't afford to do that. So what I want to do is make sure you understand how property taxes work in Texas, and then tell you where to look for these traps before it's too late. First up, one thing you need to understand is that your property taxes are a sum of multiple parts, and each one wants their pound of flesh. The entities that get to do this depend on the location of your home. The first entity is your county taxes. Now, you can expect every home to have county taxes. The next entity is your city taxes, and it is very possible to not have city taxes. See, not every home is within a city, but every home is within a county. So if you buy outside city limits, you can get no city taxes. And we've actually had buyers intentionally buy outside of city limits for this reason. Another entity you can expect every home to have is school taxes. Now, college taxes, on the other hand, will only be if the county you're in has a community college, and not all of them do. Hospital taxes work the same way. You're only charged hospital taxes if there's a county hospital in the county you live in. Okay, now we need to move on to another very important tax subject because many people do not understand what MUD taxes are. We're gonna pop over to Texas Real Estate Source, where they explain that a municipal utilities district, or MUD, is a political entity that provides utility services like water, sewerage, and drainage. So why do some homes have a MUD and others don't? Well, they answer that question as well, saying how the MUD levies taxes on commercial and private property located within the boundaries of the district. These special property taxes are then used to fund utility services infrastructure. The article continues, the MUD taxes listed are in addition to county, school district, college, and other local Texas property taxes. It explains the difference is that the MUD taxes pay for the initial utility services installed in the neighborhood, and then the other taxes go towards their respective taxing entities, which means that MUD taxes are actually temporary. So basically, in a nutshell, a MUD is paying for the cost of installing utilities in an area that didn't already have utilities. Remember how I mentioned it's not at all uncommon to not have city taxes? Well, Texas Real Estate Source explains why this sometimes happens. They advise you to remember that MUD taxes go towards local neighborhood development of infrastructure and utility services and are not distributed throughout your city. And then they bring it on home, okay, with this awesome news that I know you want to hear. Okay, you ready? MUD taxes take the place of your city taxes. Now, I do want to offer a caveat here that if a MUD were established within city limits, it is possible you could be paying both. But generally, a MUD is formed precisely because an area needing utilities isn't in a city limit. All right, summing it up. According to Texas Real Estate Source, MUD taxes are used to fund utility infrastructure, are in addition to other taxes, usually replace city taxes, are not permanent, the MUD tax rate will go down over time and could eventually be paid to zero. Are micro, local, within a city, but may cover more than a single neighborhood. I hope you're seeing how an easy mistake could be made here on the tax estimator, because chances are if there's a MUD tax, there probably isn't a city tax. It's usually an either or, which will make a big difference in your tax bill. All right, now let's talk about another often misunderstood tax, our Public Improvement District, okay, also known as a PID. Now this is your most micro-local tax of all. It goes by the specific neighborhood. Now heading back over to Texas Real Estate Source, they explain that PID is an acronym that stands for Public Improvement District, and that PID revenue can be used for a variety of community improvements, including parks, fountains, landscaping, and other non-utility enhancements. So similar to MUD, collecting taxes to pay for utilities, PIDs collect taxes to fund improvements. Summing it up, a PID is an additional tax, not an alternative one. We saw with the MUD that it often replaces the city tax, right? You have one or the other. Well, that is not the case with the PID. The PID is simply another tax added to the ones that are already there. So right off the bat, you know that a PID will definitely increase your monthly payment. PIDs fund improvements like amenities. So the more amenities you see within a community, the more likely there will be a PID that's paying for them. Now, like MUD, PID taxes are not permanent, and PIDs are micro-local to a neighborhood. For the most part, those are the itemizations you can expect for property taxes, but sometimes you'll see miscellaneous ones, okay? For example, some counties will have a variety of assessments, like Kaufman County. They have some random ones like road and bridge that you'll be taxed for. Everything we've talked about so far will add up to your total tax rate, and that's why it's so important to know exactly which ones will apply to you before you estimate your future tax rate when buying a home. All right, for example, if you added in both a MUD and city taxes, you could end up overestimating your tax rate. Your tax rate ultimately works out like this. After all of the eligible entities are added up, your tax rate will be multiplied times the taxable value of your home. And then from that, you'll apply exemptions such as your homestead exemption, and from there, after you've done all that, you end up with your tax bill. If you just made it through that explanation, congratulations, because now you know more than most homeowners do about their taxes. And therein lies a huge problem and hidden tax number one, okay, and here it is. When you didn't know you were in a PID or MUD because the seller didn't know or didn't tell you. When you're buying a pre-owned home, your average seller probably has no idea if they have a PID or MUD. It's always just been part of their mortgage payment. And like I said, most homeowners don't know all of the things we just talked about. So a big problem becomes non-disclosure. And many times it's not even intentional. Like many times sellers we work with, they don't know if they have a PID or MUD. Like usually on the form, they put unknown, and it's our job to help them find out. So maybe you used the handy dandy tax calculator to estimate your property taxes when making your offer, not even knowing you're completely off on what your taxes will be because there's a PID or a MUD or both. Now, how can you find out if the home you're considering is in a PID or MUD? Well, there are a variety of ways, all right? With new construction, the developers and builders will have this information for you. Now, with resale, it's a little trickier. Your first stop will be to check county tax records. You can also check the seller's property tax statement, reach out to city or county authorities. Reach out to the title company. And of course, you can check the seller's disclosure. But again, you should rely on that the least of all of these options, since many sellers will simply not know. All right, hidden tax number two, the seller didn't pay his property taxes and now you owe them. Now, any of my realtor buddies who are watching this video right now are probably thinking, Wendy, you ought to know better. And yes, I realize the title company's job is to prorate the property taxes at closing so the seller pays for the time he owns the home. All right, but guess what? A lot of times they get it wrong. It's a flaw with how Texas and title companies handle property taxes when a home is sold, and it can be a devastating hit to your budget. So let's talk about how this happens so you're not blindsided. First off, this hidden tax happens with pre-owned homes when you buy a home from someone who is exempt from owing property taxes. Picture a scenario, all right, where you assume that your property taxes will be prorated at closing and you'll only owe for the dates that you've actually owned the property. Now, the problem is that there's a loophole in Texas where you can end up being billed for the entire year's worth of taxes. When a seller is exempt from paying property taxes, the tax certificate at closing will show exempt because there aren't any taxes to prorate at closing. You may be wondering how often people are exempt from paying property taxes. Well, the Texas Comptroller explains that a surviving spouse of a member of the U.S. Armed Services killed or fatally injured in the line of duty is allowed a total property tax exemption on his or her residence homestead if the surviving spouse has not remarried since the death of the armed services member. Now, 100% disabled veterans can also receive a full property tax exemption. And again, the Texas Comptroller explains that a disabled veteran awarded 100% disability compensation due to a service-connected disability and a rating of 100% disabled is entitled to an exemption from taxation of the total appraised value of the veteran's residence homestead. The key issue for you to be aware of here is that the moment the home is sold, the exemption disappears and taxes are owed as if there was never an exemption. Then, what happens is because the billing system is automated, it doesn't check exemption history. All right, it just checks the current owner's exemptions, if any, and then sends out a bill accordingly. Now, the Texas Comptroller is going to give us something in writing here. It poses the question, if a 100% disabled veteran moves to a different residence homestead in the middle of a tax year, what happens to the exemption on the previous property? And then it answers, if an exemption applied to a residence homestead on January 1 ends during the year, tax is due on the homestead for the portion of the year after the date the exemption ends. But hear me when I tell you, this is on you. You are going to receive a tax bill for the entire year. It's going to be up to your due diligence to prove no taxes were owed before you owned the home. So now you're probably asking, all right, Wendy, how can I make sure this doesn't happen to me? Well, like I mentioned above, don't assume that the taxes will be correct. Before going under contract, research whether the home had any total tax exemptions. You can do this by checking with the Central Appraisal District. After closing, but before tax bills are issued, contact the appraisal district immediately. Make sure all of your closing documents and tax certificates are gathered so that if you need to, you can file a dispute to ensure you don't get overbilled. Now, there's another really bad fly in the ointment you need to think through as well, all right? When you have an escrowed mortgage, the lender actually pays your tax bill. Now, the problem with that is the lender doesn't research exemptions either. All right, they're just gonna pay whatever it is, even if it's an overpayment. Then you get charged a huge escrow shortage, all right, which then leads your mortgage payment to go way up as well. Then, of course, a late mortgage payment can damage your credit score and ultimately end in foreclosure. Getting your money back after all of this is an absolute nightmare. The appraisal district repays the lender, but your escrow account takes months to adjust. So I hope you're seeing how this is a huge motivation for you to take control and catch the incorrect tax bill before all of this happens. The thing is, the system is working as it's intended to here. All right, no one else is going to notice this mistake. You have to be diligent and proactive. All right, this is a real, very much a financial risk. I mean, even smart, careful buyers get caught off guard. You could end up overpaying thousands in taxes only to then have to fight to get get the money back, all while having to pay your higher mortgage payment. Okay, moving on to hidden tax problem number 3. The outcome of this problem is very similar to the last one. You end up with a massive end of year tax bill that totally derails your budget. All right, but let's talk about how this one happens, because it's another mistake that most buyers don't ever see coming. And get this, it happens almost every single time with new construction if you buy early in the year. So to understand why this happens, all right, you need to know how property tax proration works in Texas. Taxes are divided between the seller and the buyer depending on how long each owned the home that year. The seller is responsible for the portion covering their time in the house, while the buyer takes over from the closing date onward. All right, for example, if the closing happens on March 1st, the seller pays the taxes for January and February, and the buyer picks up the rest for the year. So where's the problem here specifically with new construction? Well, when the builder's taxes are calculated, the home is often still valued as an empty plot of land. So the builder pays for the months of their ownership with land value. By the time you've bought the home though, there's a house there. And when your taxes are calculated, you're paying for the value of a plot of land with the improvements of the new home. Here's an example to show you what I mean. Imagine a home is in Collin County. The tax entities are for the county, Prosper ISD, Collin College, and Collin County Water District. Now at closing, the appraisal district only values the land at $50,000. So the annual tax bill at this valuation is $1,593.28. So the builder, as the seller, owes 3 months worth of that amount. So they owe around $400. The appraisal district then reassesses the home later in the year, now including counting the house itself. So let's just say the new home value is calculated at $1 million, which means that the new tax bill is now $31,865.63. But the seller only paid $400 when they should have paid around $8,000 based on the real value. Now you as the buyer are responsible for that full $31,865 tax bill, even though the seller underpaid. Okay, so how do the builders get away with this? Well, they get away with it because they know the likelihood of this happening and they plan ahead in their contracts. Most builders have contract terms that do not allow for tax adjustments after closing. There are a few that agree to prorate taxes, but not nearly as many. So the buyer in this example lost $8,000. So hopefully that's another great motivator to verify your taxes before you buy. And if you're buying new construction, all right, you may simply need to plan for a major property tax shortage in your first year. Now, in this video, okay, we focused a lot on the hidden property taxes buried in your closing costs. But that's not the only surprise you might run into. There are other hidden closing costs that you should be aware of too. So if you want to know more about that, I made a whole video about it that you can check out right here. Go visit it and I'll see you there.